it's a gigantic company. I guess no one's really worried about $15 billion of borrowing.
And at the same time, they're tapping the Swiss market and the sterling market. In fact, they're looking to sell a really rare 100-year sterling bond as well. So Alphabet is out there across every type of part of the debt market. Alphabet and Infineon, the chip maker in Germany, just tapped the bond market very successfully over in Europe as well. You've just got hot on the heels of Oracle having sold $25 billion of debt at the beginning of last week. They got $129 billion of demand, a record set. You might be bracing for $400 billion of investment-grade debt coming to finance AI. That's what JP Morgan thinks we're going to be getting. Thus far, the pricing is enough to tempt people in, and everyone's saying that Bloomberg Intelligence is saying Google or Alphabet, the parent company, has a rock-solid AA credit rating. It is best in class in terms of its overall balance sheet. You don't need to worry here.
The idea of a 100-year bond for one of these hyperscalers is crazy to me because we don't even know what the next 3 years is going to look like, let alone 100 years. Maybe it's safe for Google to be doing this, for Alphabet to be doing this because of its cash and its balance sheet.
Yes.
But for the likes of Oracle, for these companies that are starting to go through some real cash burn, how are they still staying afloat? How are investors not completely revolting against them right now as they had been to end the last year?
I guess they pay enough. So it's enough that there is just this wall of demand that in the debt markets, yes, people have been talking about equity. Everyone's been demanding so much of Oracle, Amazon, Alphabet, all of the hyperscalers and cloud providers equity. But the debt markets only get to tap in on these new issuances every year or so. Infineon's coming for the first time in a year. No wonder everyone wants to have the wall of opportunity to be buying into this AI trade across the capital structure. And for now, it seems as though the price point, even though BI is saying, if you're looking at Alphabet, for example, they think you could maybe see the bond market, the yields come in about 40 basis points, but they're pricing them pretty on the nose for Alphabet. They obviously clearly got a syndicate issuance vibe from their banks that the demand is there. They don't have to suddenly go way over treasuries. You're looking about 125 basis points at the longer end. But as the year progresses, maybe you start to see these companies have to pay up more. Maybe you see pressure on the issuance of older bonds. Remember, Oracle was actually taken to task by some of its bondholders. They were sued by saying, look, when you first tapped for $18 billion at the end of last year, you never made clear you were going to be coming time and time again. We didn't realize you were going to be financing this much in AI infrastructure, and they got a suing tap on their wrist, whether or not who wins out on that particular fight. But clearly Oracle then, when they issued last week, really were very clear on this is how we see our year going. This is the only time we're going to be tapping this year. And overall, you're starting to see companies having to be really transparent about the amount. No, I mean, they kitchen sinked it. It was a mic drop last week. $200 billion is how much Amazon's going to be spending. $185 billion is what Alphabet's going to be spending. They're being very clear with investors how much they need to get.
I mean, and Oracle got off another $25 billion last week with $200 billion of demand. So, like, they could shoot somebody in Fifth Avenue and they would still be able to sell these bonds. I want to ask about Apple. The new iPhone 17e apparently coming on. I read Mark Gurman's reporting last night. So what do we know about the new product offerings?
Imminent. Yeah. Yes, you're going to get the magnetic BIC on the back to be able to help your charging. Yes, you're going to be getting the A19 chip inside, and you'll be getting some better chips that they make internally for wireless connectivity. But more broadly, it's kind of like the 16e. But a little bit of an upgrade, and the idea that they know that demand is there. They're really going to be going for the emerging markets. They're really going to be going for corporate buyers in this particular phone.
The E is the cheaper phone.
But basically the marketing is, it's got everything inside. Look, I've got a 16e, because when I walked into Apple, they were like, well, if you're not like a photographic genius, this is exactly all you need. You're still going to be able to use Apple Intelligence as and when it gets to us, and you're going to be able to have all of the memory that you currently need. So a lot of people are liking these slightly cheaper, really high-end phones. And remember, Samsung is just really going for the top end of the market at the moment. We haven't seen that much of an upgrade, which we're likely to get from Google Pixel. Their phone isn't going to have many bells and whistles being built on. So they're kind of in a league of their own at the moment. Apple can just keep on cashing in on this demand for their latest phones.